So we've done a handful of videos talking about scalping, particularly scalping on anywhere from 15 to a 5-minute time frame. And because of that, we've gotten some requests of whether we could do a video scalping on a 1-minute time frame. And that's what we're going to be talking about today, specifically a strategy I use on a regular basis. So this is a proven rules-based strategy, simple for beginners, using one indicator as a confirmation for our entries, where in this particular session, we took multiple entries, which allowed us to capitalize anywhere from 40 to 100 pips, yielding a significant profit. As tradition goes, we're going to share with you our live training footage, but more importantly, we're going to break down the rules and the criteria that we look for to identify accurate trade entries, so that way you can see if this is a strategy you want to implement into your trading. And above all else, we're going to keep things simple, following basic beginner level trading concepts to prove that you can make money in these markets by keeping things simple. If you enjoyed today's video, gained any value, like and subscribe. If you have any questions or need help, feel free to comment down below. You can also reach me directly via email or Telegram. You can access all my official contact information down below in the video description. While you're down there, don't forget to check out our valuable trading resources below, ranging from links to free demo accounts of brokers and prop firms that I use, so that way you can trade these markets and also get instantly funded, information of our trading group, our copy trade signals where you can follow and copy my own personal trades, automated trading systems, much more. Again, all of that is down below. But with that being said, let's get started with today's video and show you this simple but very effective 1-minute scalping strategy. So our point of interest revolves around a few entries that we had taken in this area between 2867 and 2860. Now, this is also a trading setup we shared for our students and members within our VIP, which, as you're about to see as we progress through this video, our followers were able to capitalize over 200 pips in profit. Why do I share this? Well, for a couple of reasons. One, transparency. Two, to also show you that these are not cherry-picked areas in the market to show you or display how a certain strategy works. These are setups that not only I personally trade, which is why I'm also going to share with you my live trade entries, but also to show you that these are setups we share within our community. And to also further validate that it is possible to be a profitable trader by following basic trading concepts like what we're about to show you today. So the main question we want to ask ourselves is, why do we take sells in this area? And this is where your levels of confluences or confirmations come into play. Now, as we can see on the 1-minute time frame, the overall structure is bullish. So if it's bullish and we want to follow the trend, how come we're not looking for buys? Why are we looking for sells? And if we zoom out, we can see as price approached this area, this was a prior level of resistance. Now, as a scalper, you don't just want to focus on the immediate time frame you're trading. You also want to look at higher time frames as well, because remember, higher time frames are going to dictate the overall momentum of the lower time frames that you're trading, whether it be the 15, the 5, or the 1 minute. Coming up to the 30-minute time frame, yeah, the overall structure is still predominantly bullish, but in the immediate area we're trading, this whole section right here is bearish, right? We can see prices creating a temporary flow of lower highs and lower lows. And we can also see that level of resistance from the 1-minute time frame aligns perfectly with this level of prior resistance, right? What was resistance here came back to retest, now serving as potential resistance once again. So coming back to the 1-minute time frame, we can see how that level of resistance lines up perfectly with the series of entries that we're about to take. Now, as a scalper trading on the 1-minute time frame, we've just identified a key level of resistance that can be confirmed on the 30-minute or even the 1 hour. Would this be considered enough information to start entering for sells in this area of the market? And a majority of you might agree, yes. Why? Because as a scalper, we're looking to get in and out of the markets very quickly to capitalize anywhere from an average of 20 to 50 pips profit. And since we know that higher time frame zones, such as this level of resistance, carry weight when trading on lower time frames, all the more reason to assume, yeah, this might be a good area to enter the market. But remember, trading is all about probabilities. And more importantly, finding or identifying the confluences that align with your sentiment of whether you think price is going to go up and down from a certain area. And this is where the one indicator that I love using on a regular basis comes into play, and that is the RSI. Now, in most cases, people like to use the RSI for identifying overbought and oversold conditions for their buys and sells. But while that may work from time to time, I actually don't like to use the RSI in this manner. Instead, I like to use the RSI for identifying divergences. And of course, this is something we cover a lot in our channel because it is very effective when used correctly. And in this case, a bearish divergence because we're looking for sells. Now, what is a divergence? A divergence is an opposite form of structure between the indicator, which in this case is the RSI, and the market. The market is creating higher highs, but in that same region, the RSI is creating lower highs. So again, this is an example of bearish divergence, indicating a potential exhaustion of the buyers where the sellers might be coming into play to push price back down. And combining that with the fact that we are at a key level of resistance, all the more reason why we're looking for sells. Because remember, we buy at levels of support, we sell at levels of resistance. So this is where we started getting ready for our trade entries between 28.67 and 28.60 with take profit targets set at 28.56. And as the trade progressed, our take profit target at 28.56 was hit, allowing us to capitalize 40 pips from our 28.60 entry and over 100 pips from our 28.67 entry, generating a profit of over $10,000. Now, let's be honest, when it comes to scalping, most people try to target anywhere from 20 to maybe 50 or 60 pips, because again, at the end of the day, the whole point of scalping is to get in and out of those markets quickly and capitalize on those gains. So the idea of targeting, a 100 pip move trading off of a 1 minute time frame is not something that most traditional scalpers will look for. But the point here, folks, is to show you how by just looking at a couple of confluences can help you not only secure those simple profits of 20 to 60 pips, but even take that a little bit longer for larger gains. This is a strategy that is not only applicable for scalping, but also great and highly effective for intraday and swing traders. So whatever your trading style might be, or what you might be thinking of getting into, this is a very simple but effective strategy that you can apply. So let's break this down in 4 simple steps. Step 1, we identified the trend, which as we can see from the immediate future, we are in an uptrend. But we wanted to implement step number 2 in identifying any levels of support resistances from higher timeframes that price could be approaching. In this example, we saw price was approaching a key level of resistance from a higher time frame. These are areas that could indicate a potential trend reversal, which are great opportunities for trade entries. Step 3, pull up the RSI to see if you can identify a divergence between the market and the RSI as price is reacting off your key level. But before we enter for our sells, you want to wait for some sort of price action confirmation indicating candle closures below our level of resistance, which we have here indicated by not only this bearish engulfing candle, but we also have this shooting star candle where we have a small body and this long wick indicating rejection and respecting our resistance. Once you have the confirmation, enter for the trade, set your stop loss beyond your resistance and your take profit at prior levels of structure and collect your profits. So there you have it, folks. Like I said, this is a very simple and basic strategy, but also, as you can see, very, very effective. Trading doesn't have to be complicated as long as you don't make it. Educate yourself on how the markets work, keep it simple, and you'll see a big difference.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.